Okay, so can you hear me? You can answer it in the YouTube comment, I think. Yeah, it's easier for me to refer there. Okay, we'll start in about 3 minutes, okay? I think it's okay, we just start now. Right, so usually what I do every week, right? So every weekend, I would try to determine where the market is going to go, right? And if, let's say, right now, because we are starting the new month, we're heading into the month of October, I would try to determine um, which side is the monthly candle going to expand towards, okay? And then I would go down into the weekly time frame, right? So the monthly candle, it's usually um, I usually analyze it right at the beginning. So I would write it down somewhere, or I'll just remember it, and then moving forward, I'll carry on that bias until something changes. Okay, and usually, if I really want to look for a um, high probability directional bias, I would wait for the second week of October, right? The opening price of Tuesday, second week, midnight opening price. So of course, you would have known that this is from day's quarterly theory. Okay, so the true open of the month starts on the opening price of Tuesday, second week of a full week. So let's say for next month we have 2nd of October opening on Monday. So from Monday to Friday, you have the full entire week that is within October. So I would use that as the first week. So usually I would like to see what happens during the first week to determine what is going to happen during the second week and so on. All right. So starting off the monthly time frame, I will note down any significant levels that I would um, um, Tuesday 6 p.m. Yes, you can use that, but I would prefer to use the midnight opening price. Okay, you can use that as well. No, nothing wrong with that. I mean, I don't think there's anything wrong with that because that is just a guideline. It's not really an entry or anything that you need high level accuracy for it. Okay, because you're just using that to determine the overall bias of the monthly candle. All right. So judging from this month, I mean this candle right here, I would use the consequent encroachment of this week here. Okay, and I'll annotate it down. So if you're really bearish, you would like to see price stay below that on the lower time frames. Okay, so let me just adjust the values. And then from there, I will annotate the area that or the level that the price is or might gravitate towards, right? So this is my bias for the monthly candle. So it's going to come out into this area here and it's going to reject and then go lower if it ever wants to rally in the month of October. Okay, so with these levels, I go down into the weekly time frame and then I look for PD arrays that are in confluence to the higher time frame. So right here we have a weekly CB lining up nicely with the consequent encroachment of the monthly wick. So if price is able to present an opportunity coming up into this area, I would anticipate that to be a turtle soup entry, right? And then price would gravitate down. So you have to plan. I mean, I usually plan. So because we haven't started October yet, so I'm planning in my head. I'm thinking like, okay, Q1 I'm preferring consolidation, and then Q2 I'm anticipating that if Q1 is a consolidation, Q2 would be a Judas swing above this level here into the weekly high, and then Q3, the third week of October, we're going to have a distribution lower into these levels here. Okay, and then Q4, if the distribution hasn't reached its end goal, then Q4 would be continuation. If the distribution has already met its goal, then I would consider a retracement. Okay, so in my mind, I'm outlining what I prefer to happen. Okay, but everything depends on the first week of October to see how it trades. It can just trade lower from this price level here, and it has nothing is invalidated. Okay, yeah. So you break the month into 4 quarters. Okay, so on a weekly time frame, you can see that we don't really need additional PD arrays, right? Because the monthly has basically given us the basics. So next step, I would look for invalidation. So at what point does my bias gets invalidated? Okay, right. If you have been watching ICT for the last two videos that he has posted on the live stream, he mentioned that any closure above the consequent encroachment of this weekly CB here, that would invalidate any bearishness heading forward into the last few months of the year. So this is taught many times before by him. So I'm gonna borrow his experience, and then I'm gonna put my invalidation similar. So basically, what he was saying is that any weekly candle closures above the consequent encroachment, that is going to be an invalidation for lower prices in the short term. Okay, so that would be a shift in trend, if you will. So with that being what do you call it? With that being set on the table, we have the invalidation and we have the targets. Then I will go down into the daily time frame. If it has to go down, it won't go above the. Yes, it won't trade above, and it will not have a weekly closing candle above that level. Right, so is that clear? It can trade above, it can like punch through the level, but you do not want to see the body close above. Okay, this concept can be applied to any time frame that you are trading. It doesn't have to be applied on the. It doesn't only have to be applied only on the higher time frame. You can use it for the lower time frames, even down to the 1 minute. Yes, wicks are allowed above the consequent encroachment, but when you see price wick above the consequent encroachment, you want to see immediate aggressive reaction in your favor. If not, then you're most probably going to be wrong. Okay, so heading down into the lower time frames, we can see that price is being really bearish down here. Okay, you see this immediate aggressive reaction once it tapped into this CB. So this is what you want to see if price ever trades to a consequent encroachment of a certain bearish PD array. Okay, you want to see something like this. This kind of gives you the confirmation that you're on site. Okay, so on a daily level, let's say it has reached into a higher time frame objective, like let's say for this low here. Okay, I'm gonna use trader Dexter's standard deviation to gather sample size to see how far can it further reach into. Okay, so the basic rule is 2 and 2.5. Within this area here, you will see price 1 to retrace or reverse. Okay, if you have any body closures below 2.5, -4 should be the next draw on liquidity. So all you need is these values for the fibs for projections. All right, so you can see clearly that right here 2 and 2.5, whenever price trades into this level, it has found some sort of a retracement and sometimes even reversals. So this is to be expected. Okay, so once it does this and it comes back down again, this is the last time you really want to see it trade to this level here before a reversal. Let's say if you're bullish, all right, but because we are bearish, obviously you want to see a candle closure on the daily time frame below 2.5. And once it does so, it's going to be a low resistance liquidity run to a higher time frame objective. Basically, the next standard deviation, which would be -4. Okay. So on a daily time frame, I would have the weekly level marked. Okay. And let's say if the monthly level lines up nicely with the weekly, I would just leave it there. But usually I would only keep the weekly levels marked. Okay. So let's say today is a Tuesday. I just got into the chart. Okay. From the daily level, I would already have my bias derived from the monthly and the weekly. Okay. And I would treat them all as power of 3. So let's say next week's opening. Okay. I want to see where the price opens. And if I'm bearish, I want to see price trade above the opening. Okay. And then I'm anticipating distribution on the second half of the week, which means Wednesday, Thursday, and Friday. Okay. So if you break down the weekly into 4 quarters based on the quarterly theory, Monday would be your Q1, Tuesday Q2, Wednesday Q3, and Thursday Q4. Right? So to further refine this theory, you can use the economic calendar. You can check is there any rate folder news during those times where you anticipate, for example, the June swing or Q3 distribution. Okay, and from there I work towards down into the 1 hour time frame. So let's just say today is Tuesday, and then I open up my charts, right? I want to trade intraday volatility. So daily time frame, I look at what has happened. Is there any daily levels been tagged? And then what am I anticipating moving forward? And then I drop down into the 1 hour time frame. Okay, so 1 hour time frame, I'll try to justify any reasons for me to go into a trade basing off of the market profile. Okay, and then on the hourly level, if I have some PD arrays that I can or I'm able to mark, I'm gonna mark them down. So right here, you have this CB respected. Okay, and then you have what, your 2022 model, right? So price has went above short-term highs. You have two up close candles, that's your bearish order block. You have this breaker. Okay, this down close candle is a breaker. Why? Because this is a swing high here. You have a higher high. The low that made the high, price traded down below, closing below this level here, this swing low here. Okay, so this is a valid breaker. And then you line up nicely. What is beside the breaker? A fair value gap. Okay, so this fair value gap was utilized to send the price higher. So this is a sensitive fair value gap. Okay, when price trades below and closes below this fair value gap and you're bullish, this can be your entry. And they have mentioned before that BPRs or inversion fair value gaps are usually more powerful than your average fair value gap right here. As you can see, price has traded right into almost the consequent encroachment of this BPR, or you can use it as your inversion fair value gap. And then you have the aggressive sell-off. Okay, all right, so from judging from this price action right here, obviously order flow is bearish. So what is next? Moving forward, you're going to look for discount, a raise. Best case scenarios, you find inefficiencies. And then I prefer to trade to inefficiencies rather than old swing lows. Okay, so we have inefficiency right here, this low, this to this candle's high. That's an inefficiency that has yet been tagged. You have this inefficiency here as well. Okay, so these two levels here are targets that you can use for your intraday trading setups. All right, and then after I have derived my bias and my targets and my invalidations, I'm going to drop down into 15 minutes. So dropping down into 15 minutes, you get a clearer picture of what price is doing. Okay, and then from there on, I drop down into 5 minutes. What swing high or low do you mark to find the premium and discount? Okay, so let's go back to the 1 hour. So for swing lows and swing highs, you use the current dealing range. So if price is here, okay, your current dealing range would be from the lowest low that started to run all the way to the high that broke the structure here. So this right here is your current dealing range. Okay, so as you can see, it has reached into discount before reversing back up. Okay, and if you want to drive it down further, okay, you can use the Fib projections here as well. On the 15 minutes, okay, right here it's not too accurate on the 15 minutes. So if you drop down to 15 minutes, this was the last low, and then you have the shift in market structure right here, right? So you can see that price reacted nicely off this 2.5, but look at the body, it's closing above 2.5. So what is it going to go for? Fourth. But what is stopping this fourth deviation? You have the high time frame levels. So this tool here, it's basically a sample size. Okay, you don't really need it to be super accurate in order to have profitability, right? You just use it as a gauge, right? Obviously, if you read more into Trader Dexter, you will find that you can actually mark out right to its specific accuracy, right? But obviously I don't really find that is necessary. Okay, but you can use the information however you want it to. Okay, so where was I? Okay, on the 5 minutes. So on the 5 minutes, because I'm trading intraday, I will mark out midnight, 6 o'clock, okay, to 12. This is your daily, quarterly theory now. Okay, so from here, how do we know that that is the swing high, low is the dealing range? Why is the second displacement leg low and the latest high not out, taken as the dealing range? I don't really quite understand your question, but let me just try to understand it. Okay. How do we know that's the swing high, low, and is the dealing range? Okay. For dealing range, you're looking for one direction moves. Okay, you're looking for one direction moves. So let's say, okay, let me give you another example. Right. So if this was here, right, you look for the last stop hunt that made this low here, made a lower low, right? So you look for the last stop hunt that made this made a lower low below this low here. Okay, use that high, and then you go down to the last stop hunt that shifts market structure. Okay, so right here, this is your dealing range. You look for stop hunts, basically. You look for the last stop hunt that made a new low. Okay, the last stop hunt that made a new high. Right? And then you continue to watch and see if it makes another lower low. If it does makes another lower low, then you have to factor in that as well. So right here, obviously you can see that there's a shift in market structure. Okay, so right here, what you're looking at is basically market maker buy model, right? So you have the original high that started off this downtrend, right? One-sided direction, even though you have some ups and downs, but overall it's trending down. Okay, so right now you have this displacement here, huge displacement here, and then you understand that this is a stop hunt, right? And then right here you have your inefficiency, and then in the current dealing range it traded all the way down to almost 50%. Okay, let's see if it trades down to 50% before reversing. Right, so it doesn't. So right here, almost close to it, right? From discount to premium, and then from premium to discount. Okay, ICT teaches that basically that's how the price moves. Okay, so let's continue. So on the 5 minutes, right, I would have a different chart. I would have um, three charts open on the 5 minutes. Basically, your three big indices, your Nasdaq, ES, and YM, Dow Jones. So let me just show you. I have this chart here, this template. Okay, so I will have this open up in another screen. I will watch the 5 minutes. I want to see So basically, I want to see if they are moving in tandem, which means moving together, right? Higher high, higher high, and then it's trending in the same direction. That is when I filter out if I want to take a trade. So let's say during right, so during this timing here, you can see that ES is trading lower, Dow Jones is trading lower, but when you look at Nasdaq, this is low probability conditions. So I'll filter that out. Okay, I'll filter that out. I wouldn't try to trade in such conditions. Okay, I would only trade when everything lines up nicely, like right here. Okay, but it doesn't mean that you cannot take um short-term scalps. Okay, because you can still play around with the volatility, but you just have to be very nimble, as ICT says. Okay, so after dividing them into quarters, Q1, Q2, Q3 of the day, right? Usually I only focus on Q3. I determine what has Q1 does, what has Q1 accomplished, and then what has Q2 accomplished, and then I predict, I anticipate what is Q3 going to present. Okay, so within this Q3, you want to narrow it down to the micro sessions Q3. Okay, so between 6 to 12, you have 4 quarters as well. Okay, so the first quarter, second quarter, third quarter, and the fourth quarter. Okay, and then you want to focus in Q3 right here. Okay, so Q3 is from 9 to 10:30. Okay, and then I will go down into the 1 minute time frame. Okay, and then I would break them up again into 4 quarters. Okay, basically 9:22 to 9:45 and then 10:07. So I would focus basically on the last 2 quarters, Q3 and Q4. But I would much prefer to take any trades or enter any trades within Q3 or Q2. Okay, that's my preference. But let's say if Q1 is accumulation, Q2 it's also accumulation, then you would expect Q3 to be your Judas swing, and then Q4 to be your distribution. Okay? So you have to see what Q1 is doing, even down to the very micro session. Okay? So if you pan out the opening prices of the true opening prices, true open, okay? 920, sorry, this is 23. 922. 922 is your true open for your micro session, and then 7:30 it's your true open for your AM session, and then you have the midnight opening, which is your true open for the daily. Midnight open right here. Okay, right here. But there is mostly such scenarios in which the Q2 does the manipulation move. So what do you do in such? I wait. Okay, so usually if you're anticipating Q3 to be a manipulation, you want to see accumulation in Q1 and Q2. Okay, only in this profile whereby Q1 and Q2 is in accumulation, then you will get your manipulation at Q3. Okay, that's the rule here. Q1 and Q2, I'll repeat it. Q1 and Q2 should be in accumulation, and then you can anticipate Q3 to be manipulation. Um, Mostly such scenarios in which Q2 does the manipulation and then distribute. Okay, this is even better. Sorry, I read your question wrongly. So if Q2 is going to do the manipulation, right? So let's say you have this accumulation right here, and then instead of Q3, you have Q2 doing that juice swing. That's even better because it fits in the default um, theory. Okay, so if it does the Judas, you wait for Q3 for entry. Okay, you always want to enter after the quarter that has done the Judas swing. So it doesn't matter how high or how fast it comes down. You have to understand and you have to trust that the next quarter can only then you enter. Okay, so let's say I'm just using this example right here. Okay, if you have entered inside Q3 while it's doing its Judas swing, you would be stopped out. Like let's say if you're bearish, okay, you'll be stopped out quite a lot. But of course, there wasn't any bearish setup right here. Okay, so the setups occur right here. Okay, how do you define this as a setup? Why is this a setup? There is no swing low down here. Okay, you can use your order block. So one, two, three up close candles here. This is your bearish order block. Any price closures below the opening price of this consequent up close candles, then you have your change in state of delivery. And if there's a displacement, it's even better. Okay, so this would be your Q4 entry, right? As you can see, there's always an entry provided to you almost all the time in the following session, in the following not session but quarter after the Judas. You don't really have to enter during the Judas, okay, during the manipulation session. Okay, so right here you enter because you're anticipating this to be your manipulation. Distribution is always most very often low resistance liquidity, so you don't have to wait very long for your targets to be met. So obviously right here you have your equal lows, okay, and you have this low that made the high. Of course, you have this low hanging fruit target here. You can target this inefficiency here, it's more than enough, or you can target this low here, the low that made the high. Okay, because stop loss is going to be trailed here if it hasn't been trailed here. So there you have it. You can end your, basically, right, I always end my trading by 10:30. Okay, best case scenario, I end it by 10:07 because Q3 is the distribution. So once it has done its distribution, I don't care how far it has went to. I use time as my stop loss or as my trade closure. So let's say by 10:30 this low hasn't been taken up, I would have gladly closed my position because I'm not going to endure the retracements that's coming after 10:30. Okay, in this example itself. Okay, so my trading is only from 9 to 10:30, basically 90 minutes, and I primarily focus on entries after 9:45. Okay, and then it depends. If Q2 provides manipulation, great. I'll be able to enter after 9:45, and then I'll cut my position by 10:07. Okay, if such situation occurs whereby you get your Q3 manipulation, okay, then you enter right after 10:07, and then you cut or you close all your positions by 10:30. Okay, because I don't really have a lot of patience to withstand such retracements or any reversals that's coming against my bias. So I would much rather stay within these timings. Okay, and as you can see, the true opens, prices are all above true open. Your entry must be above true open. Okay, that would validate your, how do you call it, your probabilities. Okay, that is going to filter out your probabilities of whether you are right or wrong. Do you take any entry on Q2 immediately? I have tried that quite a few times, and usually I get stopped out. Not a lot, because I trail my stop loss rather quickly. So yes, you can do that, but sometimes you got to expect that sometimes you will get stopped out because of timing. The manipulation might not be completed. Okay, they might want to run near term swing highs like right here. Okay, before your real shift. So you got to take into that as your consideration if you're going to enter during the manipulation phase. Yes, you can be done. Answer is yes, but you need to understand that there's a higher chance of you getting stopped out, right? Especially if the lower time frames wants to present a SMT divergence, right? And if your market happens to be the ones that is in strength of going higher, like let's say higher highs on Nasdaq, lower highs on ES, then you will get stopped out if you're trading on Nasdaq. Do you enter on 1 minute or 5 minutes? I like 1 minute because my time frame is very short. So basically, I'm only targeting one session. Okay, my time frame is only 23 minutes, so I would prefer to enter on 1 minute. Okay, I've done my presentation. If there's anything unclear, you can ask your questions. I'm just gonna take questions for now. It's 1 minute if I'm on TradingView, but of course, if I'm using other trading platforms like, for example, Quant Tower, I can drop down to 30 seconds. That's your ICT Cameron's model. 30 seconds. You can find 30 seconds inefficiencies right here, right? But you must have your market structure derived from minimum 1 minute. Okay. Uh, so let's say, for example, if you're trading on a 1 minute, you like to derive your market structure on the 5 minutes minimum. Okay. So for me, usually I open up as I mentioned, I open up the 5 minutes charts on my another screen, and then I determine where is it going to go, and then on a 1 minute I wait for a shift in market structure or a change in the state of delivery, and then I enter at the 1 minute time frame. Don't you wait for 15 minutes period and take entry there on one? Okay, 15 minutes. I use that as target. Okay, because from my personal observation, if you are looking for 15 minutes for entry, usually you miss the entry, right? So because my training session is only 23 minutes, 23 minutes, yes, 23 minutes. Out of 15, out of 23, 15 is spent on waiting for the price to present a shift. So by this time here, you would have missed the lower time frame distribution, and then you have to wait for, if you're okay, let's say if you're trading on, you want to take entry based on 15 minutes, then you will need what do you call it, you will need the 1 hour time frame or the 4 hours time frame for your narrative, right? So let's say if you're trading predominantly on 15 minutes, you wouldn't go down to the micro session quarters. You would just stick to your daily quarters. Not sorry, not daily, but AM session quarters. Okay. So 15-minute wise, you would remove this here. 15 minutes. Yes. So 15 minutes, you will use the quarters here. So let's say from here, you have your stop hunt at Q3. Okay. 9 to 10:30 is at Q3. And then because right here you have your accumulation and then you have your manipulation on Q2, and then you wait to see if there's any shift in market structure. No, you get another higher Judas swing right at Q3, and then Q3 down, Q4 shift in market structure right here, true open, the micro session. But you can leave this out. You can basically just use the 730. Is it above 730? Yes. Is there a fair value gap? Yes, there's a tiny fair value gap right here. Okay, there's a tiny fair value gap right here. Right? Or you can go down to the lower time frames to find a better entry if you think that this is way too small. Okay, and then you enter there, and then you want to see distribution by 12. Yes, you can do that, and then you get, of course, your move will be larger, but you have to wait longer. I meant to say we were right. I meant to say we wait for a manipulation to hit a PD array, right? So do you trade? Do you wait for 15-minute time frame PD array hit and then take low time frame entry? Okay. For this, usually I do not look at the 15 minutes. I look at the 1 hour. I prefer to use the 1 hour. Okay, if I don't see anything on the 1 hour, I will use the 15 minutes. But everything must have a context. So let's say you're bearish on the week or on the day itself. Okay, when you see something like this, yes, you can take. But let's say if you're bullish, then your whole idea kind of reverse. So if you're bullish right here, you can do so. Right here you have your accumulation, and then your manipulation, and then your distribution right here. This is your manipulation phase basically, and then your distribution phase into a higher time frame objective, which is your, I think ICT mentioned that this is the 4-hour PD array. Yeah. So you need what do you call that? How do I explain this? Okay, usually I use the daily and then I use the 1 hour. I don't really look at the 4 hour. So if there's any higher time frame, 1 hour time frame PD array that has been met, I look to see if it matches my bias, and if so, I will look to take a trade. If it doesn't, then I'll just leave it. So 1 hour is the highest that I'm gonna refer to for my for that so-called Judas swing into a certain PD array, because my trading session is only 23 minutes, so there's no point in looking at 4 hour or targeting 4 hour or daily, because price is not going to gravitate to that extent during in the span of 23 minutes. It usually takes about a couple of 15 minutes candles to reach to a higher time frame PD array, for example the 4 hours time frame. Yeah, I hope that explains. I don't really know how to explain that. Okay. And also because I'm trading on the micro time frames, I mean the micro sessions, I don't really need to have a bias, you see. I only need to have I only need to know whether the daily candle is going to expand higher or lower. Okay, because I'm trading in the micro sessions. But of course, if you are trading on the AM session, then in that case you will need a higher time frame PD array in order to line up nicely for that move. Okay, as Romeo has said it before, I think Day has mentioned it before as well. 1 minute you look for 15 minutes. Okay, 5 minutes you look for 1 hour, and then 15 minutes you look for 4 hours. If I'm not wrong, this is the hierarchy. Yeah, you can double check it yourself. I think they have pinned it somewhere. Okay, you just have to check it. Right. So another thing that I have learned from oh, so do you consider the 3 minute market structure shift? What do you mean by 3 minute market structure shift? I don't quite understand um, your question there, right? You mean this? I mean, basing off this chart or in general? Yep. And also another thing that I have learned from Fair Value God. Okay, you can check out his Instagram, not Instagram but Twitter. Okay, Fair Value God. Okay, I'm not sure if you guys have heard of him, but he basically mentions that when price has reached its equilibrium, you want to see parabolic moves to your targets. Okay, so right here, this is your current dealing range. Okay, so let's say you are short here. When price moves below your 50% level, right, starts to trade below and close below the 50% level, you want to see parabolic moves to your target. Okay, this is what I learned, something that I've learned from Fair Value God. You can check him out on Twitter. Basically, if you want a shortcut, you can just go to my Twitter. The handle is the same, right? There are 11 people I'm following. I learned everything from them. Of course, ICT is included within the 11. So if you want to dig in further yourself, you can just go through um, their works, and then you can see if you want to pluck it out and then put it inside your own model or something. There are lots of gems that they have given. This theory itself is based on a reversal. Okay, because only on reversals you get the opposing moves. right? It can be applied to higher time frames as well. So let's, okay, for example, on hourly. So right here, as you can see, 50% is right here. When price closing starts to close above 50%, you want to see parabolic moves to your targets. Okay, here and here. You look at the amount of retracement, it's not too much. It's always like a down to an inefficiency higher, down into inefficiency higher. This is the kind of moves that you want to be in. I mean, me personally, because I do not have lots of patience and I don't really like to sit in trades that um, just go sideways. Okay, I think, yeah, I'm just trying to be efficient with my time. So if you want to learn more about market structure, I mean not market structure, sorry, market maker buy model or sell model, you can follow this person called Zusi. I think I follow him on Instagram as well. Zusi market maker model. All right, basically what you're seeing right here is your market maker model. Fair Value God teaches them, I mean not teaches, but showcases them as well, but not as often as um, Zusi. Okay, and also if you have been watching Day, um, this right here is very signature that he always uses. Okay, so you look at this low here. If you anticipate this to be a stop hunt, there's a very likely chance of price coming down into this low again, like it does right here. And let's say if you want or you aspire to be a turtle soup trader, you can use this as your entry, and your stops will be down here. I think that's how they trades the turtle soups. Even on the lower time frames, you can see this happening almost every time when he enters, um, using the turtle soup. Okay, not not pyramids. So he'll enter here, and then he'll pyramid up here into the final objective, right? But prices must be in discount. So if you watch days trading replays or what, you'll see this happening. You see him entering trades down here at the lows, and me, right? I used to ask questions like, how did he enter down here? What's the validation, or what's the whole idea behind it? Okay, so what I understand is price is gonna come back down into the old low that it has stopped hunt, and then it's gonna hunt it one more time, and then it reverses. ICT mentioned this as well in some of his live streams. Yeah, and he took, I think, one or two trades with this model here as well. This itself is a model, right? If you have a good graphs of what's gonna happen, um, basing off of a reversal. And if you're wondering how Romeo trades, he trades um like his entries are always on the very close to the very low, and his exits will be right here. Much of his positions will be taken off right here, and then he will hold a runner for the final objective. That's how he trades for Romeo. I mean, from what I observed, I might be wrong, but that's how I see it. Right? You can use that as your model as well, but you must have a context behind why you're buying below the low here. It must line up nicely with time. So yeah, if you have been following Romeo, he's an expert in turtle soups. If you want to acquire that, then you can watch his trade setups. But I think for me, I don't really have the confidence for turtle soup. I'll reserve it for a later part of the trading stage. Right. So, is there any more questions? If not, I'm just gonna end the live stream. All right. So I'll just wait around for 5 more minutes. If there is no questions, I'll just cut it. All right. So the 5 minutes starts now. I'll cut it at around 11:45 based on this current time zone here. All right. All right. So just came back from my toilet break. Can you hear me? Just to double check. Okay. Yes, I can often trade most days of the week if conditions presents itself because ultimately I'm looking for a internal liquidity run. Okay, I don't need to capture the entire daily range. I just need to capture a part of it, right? Not the whole bulk of it, but a part of it. Yes. But I would usually avoid Mondays unless it's non-farm payroll week, like maybe next week. So I only trade on Mondays during non-farm payroll week, and it must have a news driver. If it doesn't have any news driver on that particular Monday itself, I'll avoid trading that day because from my experience, Monday I tend to get losses on Mondays, right? Usually, um, so I'm treating Monday as low probability. No, it's okay, no problem at all. Okay, so for usually for micro sessions, I start from the daily. Okay, I start from the daily. I mark out the points of interest on the daily, and then I jump into the 1 hour to look for short-term liquidity pools, and then after that, I go into 15 minutes to get a clearer picture, and then I go down into the 5 minutes as monitoring. So I will have one on my screen, basically 5 minutes only, and I'll monitor the three averages to see if they're moving in tandem on low time frames. And if so, I will go down into the 1 minute and I'll look for the timings and I'll mark out the true opens as they form, and I'll judge the quarterly, the Q1 and Q2, and then um, on the 5 minutes, I'll look for a reason to trade. And if a reason presents itself, I will be entering on a 1 minute market structure shift. The mapping out that one, would you mind just mapping out that one more time? Yeah, I think there's a slight delay, so maybe after you have listened, um, to see if I've outlined it as you would like to. Just down to 15, higher time frame, daily down to 15. Okay, so on the daily, I will mark the points of interest. Okay, so basically any PD arrays on the left and swing highs and lows that will determine the current dealing range. And then I'll go down into 1 hour time frame for narrative and market structure. If 1 minute isn't very clear, I'm gonna go down into the 15 minutes. And if 15 minutes doesn't present itself, like for example something like this, I would try to avoid trading that day. Okay. But of course, don't try to limit yourself. Okay. If once you do it many times, experience will teach you that, right? You can actually trade something like this, but you just have to be very sharp with your eyes. Okay, so right here, the price action looks very bad, okay? But if you look towards the left, you have inefficiency here, and you have your breaker right here. So swing low, lower low, the high that made the low, price is closing above. This would be the current dealing range. Is it in discount? Yes. A breaker in a discount is one of the most powerful PD arrays that you can have. So right here, the breaker trades to it, right? And then you measure the close. Is it below the mean threshold? No, right into the mean threshold, okay? Right here. This two up close candle is the breaker, trading right into the mean threshold of the breaker. Price reverses. So when you're anticipating this, you can go down into the 5 minutes time frame. Okay, you over here you have, and you will be expecting a stop hunt. Okay, right, I'm just gonna go through this. Okay, so you're anticipating a stop hunt below the lows here, and then you're expecting a reversal because of the higher time frame narrative. Okay, 9, 10:30, 1 minute. Okay, 1 minute. You break down into the 4 quarters again. 20, 2, and 7. Accumulation, manipulation, lining up nicely with the higher time frame. Okay, distribution right at 9:45. Okay, you see this fair value gap here. Entry. Where's the true open of the micro session? It's right here. Okay, it's below the true open. 9:22. Below the true open, yes. Fair value gap, yes. Anticipating bullish, yes. Does it have a shift in market structure? Yes. This swing high here taken out after taking out two lows down here. Entry here. Run, fall. This high here, right? Did not get it, but look at the time. 10:07. When you see price like this, okay, you incorporate the dealing range, fair value gods theory. After 50%, you expect parabolic runs to your objectives. Runs up here, made a swing high, made another swing high, and refuses to trade run above this swing high. Okay, so this is the key here. Because we are nearing the end of the cycle, the end of the session, you really want to see the price attack this high before 10:07. So once this high is unable to close above convincingly the high here, and most importantly the last up close candle here, it's not even able to close above the mean threshold, that's a sign to cut your trade. And then you see this reversal down. So this is why I like to keep my trades within one session. I just want this move here. Okay, this is just one example of how you can break it down and then utilize whatever's that's given. Yes, the reason why I made this as one of my rule or requirements is because I don't want to spend mental capital. Because I cannot stand this type of retracements. I get I get anxious, so I like to cut my trades here, based on time. So if you were trading on 5 minutes or 15 minutes, same thing applies. Okay, you have your quarters here: accumulation, manipulation, distribution, down into a higher time frame level, and then you get the reversal here. So at what time do you want to enter to take out these highs here? The next session. So right at 10:30, there is your entry. Volume imbalance right here. Order block down here. Bullish order block. Your stops will be down here. Okay, and then you ride this up to this high here within this session, and then you take note of the time. How fast did it trade up into this area? And if you have like maybe half a session more to go, you can hold the trade for higher time frame objectives. So how do you gauge how far it's gonna run? If let's say it has met your objective really early in the session, you use this swing low to this swing high. Trader Dexter's standard deviation, swing low, swing high, you project it out. Okay, above this high, so you have 2.5. Closing above 2.5 is going to reach to 4 right here. So this is really amazing to see. But of course, you would have probably um, cut your trade right around here, which is quite amazing run here for this current session. Let's just say if you're trading on a higher time frame like 5 minutes, 15 minutes. All right, I think I'm gonna close the session right now. We are in like 20 minutes extra. All right, so if there are any more questions after watching the video or after digesting or whatsoever, you can just leave it in the Telegram. I'll try to answer them if I can using text, but if not, then I'll just have to use the next session, if there is one, to answer the questions. And yep, I think with this I'm gonna sign out. I'm not gonna wait for any confirmation. I'm just gonna sign out now. All right. Enjoy your weekends.